Good morning. It is Wednesday, July the 8th, so here's what's on our agenda this morning. Oil prices jumping as the Middle East ceasefire gets yet another test. The Kospi is heading for bear market territory after a really volatile session. And far-right politics in Europe at a crossroads. We watch bond markets, certainly in France.
OK, let's talk about all of the stories Anna's just laid out. Let's put some numbers to them and figure out where we are. Brent crude is 76.64. We're up by 3.34%. Actually, what I think is interesting here is you've had a bigger reaction in the bond market than you have in the crude market, which I think is fairly interesting. Kospi, we're very close to a bear market. If we close here, we're within 1% of that bear market territory. Take a look at the double-levered SK Hynix product. It is down by circa 50%. Massive moves that we're getting here. So the Kospi is closing down 4.5%. in about half an hour's time. Take a look at Chinese tech equities. European equities, again, this area of calm that we're getting, certainly at the index level. We'll talk about that in more detail as well in just a moment. We're an hour away. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. This is the opening trade then. It's just gone 7 o'clock here in London. Let's talk about what is moving oil prices this morning, because this seems to be something that is increasingly putting the inflation story back on the agenda for bond markets and for other assets. So we're up by 3% this morning, guys. 76.55 is where we are on the Brent price, as you've just been outlining. And yet another day where we get a test of the ceasefire. Is it right to still refer to this as a ceasefire? Interestingly, US officials are signalling, this was, quotes from our Bloomberg News team, unidentified officials saying that the negotiations continue to work on a deal. So there isn't a signalling that this is the end, that they want to step back. And talks are supposedly still continuing, even if they have paused for that funeral taking place in Iran right now. So we've seen overnight the US attacking 80 targets, Iran attacking other targets within the region, and crucially, the US changing its mind, or at least going back on the lifting of the waiver on Iranian oil sales. So all of this adding up to break-evens on the rise. Inflation seems to be back as a theme.
Yeah, essentially the bond market reaction was much bigger yesterday, which I thought was amazing in terms of where we saw the reaction showing up. It was definitely the bond market saying, actually, we think there's going to be an inflation issue. We need to price that back in. Have we mispriced what is happening in the Gulf? I think is the key question that I think a lot of people are going to be asking themselves. Have we overdone the exuberance on the fact that we've seen oil dropping as sharply as it has been? You can take a look at this. Look at the CCRV function on your Bloomberg terminal. It's a fantastic function. You can see the shape of the Brent curve now has completely changed versus even just a couple of days ago. A couple of days ago, you had front-month crude below where crude was a couple of months out. And that is completely reversed. So the front month is now up and up sharply. The market is pricing in the possibility that the trickle of tankers that we've seen coming through the Gulf kind of grinds to a standstill. So a complete repricing in the market. How much further does this go? I think is the question. Certainly the oil market and the bond market needs to answer now.
Yeah, absolutely. And yesterday, actually, we saw pretty muted response in the oil markets themselves. Gas markets were where the action was. Today, we see gas markets are up. We've got the TTF price up by 3% this morning, but also oil prices. So as if we maybe need to focus on this. We'll come back to the bond market story because there's politics in the mix as well. But certainly at 7:30 UK time, we'll watch to see whether this higher energy price story is reflected.
Bank of England out with another warning yesterday when it comes to what is happening with the AI trade. And if right on cue, you see this market move that we're getting in the Kospi overnight, we are very close. We're going to close in, 26 minutes time on the Kospi. Are we going to be in a bear market at that point? It is down and down hard. You're seeing a big rotation, it looks like, into Chinese tech stocks. If you take a look at the double-levered SK Hynix product, it is down by circa 50% off its highs. Its highs were only hit a few weeks ago, and it's down 50% already. So you're getting the idea that there's significant leverage in this market. This is having a big impact on the CTAs, obviously around the world, because you're seeing this rippling around the world. The momentum followers are certainly struggling. The winners aren't winning. That's an issue. But it's interesting as well that foreign money has been coming out of the Korean market recently. Does it go back in now?
Yeah.
Does a better valuation attract more money back into this market? What does retail do? There's some, again, big questions.
Or does that foreign money decide to play this over in New York? We've got SK Hynix coming to the market on Friday. Is that part of the changing of the structure of where you can play this story that's happening here? Or is it just, as you say, that the momentum is out of this trade, the momentum is out of the AI trade, or the AI trade itself is rotating into, dare we go back into hyperscalers? Some people talking about seeing an uptick in hyperscalers, which seems as if, is that the rotation we're talking about? Or are we talking about a broadening rather than a rotation within tech, a broadening into other things that Europe does well at? There was talk about the US pharma sector doing okay yesterday. Maybe that's something that Europe can pick up on. The
problem is, and Torsten Slock over at Apollo was pointing this out, what you're not getting is a big pickup in the rest of the S&P, outside of the hyperscalers. Because maybe what you're not seeing there is a reflection of the reality that AI is beginning to show up in this sort of productivity story. So you're getting this kind of, can the rest of, how far can a rally in the rest of the market go if you don't get a big productivity benefit from AI? And if you don't get that, does that ultimately weigh on the hyperscalers as well? And there's lots of interesting stuff around the hyperscalers as well in terms of they are clearly looking to find ways to cut costs now, which I think is an interesting kind of change in messaging out of that sector. Yeah, that is interesting. We have a lot of politics to talk about, and from a market perspective, what is important to know, I think, is that the decision by Marine Le Pen yesterday to announce her candidacy, to confirm that she is going to run in 2027. It came after the bell yesterday. So if bond markets want to react to this, then we'll keep an eye on them in 24 minutes' time, roughly, when they open up. So we'll watch for that in the European bond market story. But they didn't move much on the announcement yesterday of the fact that the timing was going to line up so that she could run. So you think maybe we won't get much response because we would have got a chance to respond to this yesterday. As far as the UK story is concerned, I mean, I've seen so many theories as to why Nigel Farage is doing this, and I'm not sure any of them tell the full story, really. But suffice to say, we're heading for another by-election on the South Coast. In Clacton, yeah. You do wonder, you put these two stories together, is the threat from the right diminishing? Is Le Pen making a mistake here? In as much as she potentially could be fighting this election with an ankle bracelet on. Is that something that the swing voters will worry about? It's not certain that that's going to happen. We don't know, but it's a very visible symbol of what has happened to her. And you do wonder whether the swing voters will... her core voters probably won't have a problem with this. And it's like Farage as well. Will his core voters have a problem with what he's doing? But it's the swing voter that really matters. Right, yes, absolutely. And so the swing voter might not like the conviction. Yeah, I'm really looking for some of the detail, which we'll get from Caroline later in the programme, around the ankle bracelet, because she said she wouldn't run with that. But now, is she going to appeal again? And does that have the potential to delay the application of that once again? So all of that very much in the mix. But what does seem to be most important in the market's mind is not necessarily that she's running, because maybe everyone assumed that, but who's going to stand against her. And so if you make the assumption that the National Rally gets into the second round, who is the person they are up against? And there is a huge lack of clarity on that subject in France. Don't know. Hard to price at this point. Hard to get a kind of sense of kind of where we're going to be in a year's time. What have we got coming up on the show? It's a huge morning, really busy morning. I'm actually quite surprised how much kind of significance there is today. Kamal Sharma, Bank of America Global Research, G10 FX Strategy, is going to be joining us, as will Christian Muller-Glissman, Goldman Sachs' Asset Allocation Research Head. Looking forward to both of those conversations. Really looking forward as well to talking to Paul Horvath. He is the Orchard Global CEO and co-founder, hedge fund manager. Really big views on what is happening in the AI space right now. He's got serious concerns around what is happening with the insurers and their link into private credit. We'll talk about all of that. What else is percolating? I think is an interesting question for him as well. Yeah, absolutely. In terms of the day's agenda then, today President Trump is attending that NATO summit in Ankara. We've also already heard a lot of his thoughts on defence. We'll return to that theme through the show and in the moments ahead. UniCredit will announce the results of its extended tender offer for Commerce Bank. The politics, very interesting. In there, we'll get some data out of the United States, and we'll get FOMC minutes. And will these come in a slimmed down form? Will we get a lot less detail? Will the few and the many, will they be things of the past? We'll have to wait to see. But NATO, certainly a big theme. NATO is a big theme. It's interesting. If you look at the fact that we had the Hague Summit was kind of the summit where we've got pushed here in Europe to spend more. This summit feels like it's the summit where we are being told kind of how that money is going to be spent. You're looking at live pictures currently coming from Ankara, where the NATO summit is taking place. I'm told that is the Northern Macedonian leader. I'm going to have to take whoever's voice that is in my head's word for that. But we are watching this very carefully. This is about spending now. This is about committing. But how can Europe spend domestically is a key question that I think a lot of the US primes are looking at the moment. How much of this money is going to be spent in the US? How much of this money is going to be spent in Europe? Can Europe rebuild its own platforms?
Yeah, absolutely. And I think a lot of the European leaders want to keep Ukraine on the agenda, despite the fact we've seen flare-ups and tests of the ceasefire in Iran. So can Ukraine be on the agenda? President Trump, before leaving for Ankara, said we're getting much closer. And that seemed to be something that maybe put a bit of pressure on defence stocks overnight in yesterday's session. So we'll keep an eye on that. How resilient is the European defence push? It seems like it's pretty well in train now to any resolution of the Ukraine conflict would be an interesting thing to think about, but maybe just as a thought exercise, because I'm not sure anybody thinks that it's coming to an end very, very soon.
No, but you're right. How that would affect energy markets, etc., I think would be really interesting. We are going to be at that NATO summit throughout the day. We've got some great guests. We've got the Belgian Foreign Minister coming up very shortly. The Estonian Prime Minister is going to be joining us. And we're also going to be joined by the NATO Military Committee Chair. All of that is coming up. Plus, we've got Amazon's new bonds getting a cooler reception from investors. The AI debt story. The Bank of England was talking about this yesterday, certainly flooding markets. We'll discuss that in the second hour of the programme. How big an issue could that be? A bigger threat could that be? But next, we're going to talk about oil prices. Oil on the up as the US strikes targets inside Iran, also blocking Tehran from selling its crude. We'll get the latest from the region. You want to join the conversation? And we'd love to hear from you, folks. IB Plus BBTV Go is the function on your Bloomberg terminal. This is Bloomberg.
Welcome back, everybody. This is the opening trade. 7:14 here in London, and the European equity futures picture looks pretty negative. The context for this is that the Asia session has been under pressure, certainly on the Kospi. So we see that classic negativity there, or a lot of volatility there, I should say. There is some rotation within the tech sector that is interesting to think about in the Asia session. But the Nasdaq futures picture down by 0.2%. So weakness in tech could be a theme that we once again talk about here in Europe. Now, the fragile ceasefire between the US and Iran is facing a fresh test. Oil and gas prices on the rise after the US launched a new round of strikes against Iran and blocked oil sales, with reports of Iran targeting sites in Bahrain and Kuwait. Bloomberg's Abir Abu Omar joins us from Dubai. Abir, has there been response then from Iran to these strikes? We know that the US has struck some 80 targets overnight. Bring us up to speed.
Good morning, Anna. Yeah, this is a response, actually, to what Iran did yesterday, which is hitting this Qatar flagged ship in the Strait of Hormuz that was laden with LNG for not sticking to the routes that Iran had laid out for ships and tankers that are crossing the Strait of Hormuz currently. And so what we saw overnight and throughout the early hours of the morning is that the United States had struck Iranian Air Defense Systems command and control networks and also radar sites, along with some missile capabilities in Iran, over 80 targets, as you have mentioned. And so Iran's response so far has been hitting countries in the region. That includes Bahrain and Kuwait. Now, this is not unprecedented, Anna. Over the past 3 weeks, and since the MOU was signed about 3 weeks ago, we've seen these skirmishes happening. But this certainly feels like a bigger test to those negotiations that are ongoing, albeit they are suspended currently for the funeral, or the mass funeral, for the late supreme leader in Iran. So we're keeping an eye out on the details of what Iran decides to do going forward, if there will be more retaliation from both the United States and Iran. But for now, what we're sure about is that Iran seems to really be asserting its dominance over the Strait of Hormuz and over just who's allowed to make their way through the Strait of Hormuz. And this is creating all this conflict in the region, but a fast developing situation that we're keeping an eye on for the remainder of the day.
As is the oil market. Abir, thank you very much indeed for the update. Abir Abu Omar joining us out of Dubai. Now, the resumption of strikes in Iran comes as NATO allies continue to meet in Turkey. The NATO Secretary General, Mark Rutte, telling reporters that the latest US attacks on Iran were, quote, absolutely necessary. Let's get another take on this and bring back in Bloomberg's chief Europe correspondent, Oliver Crook, who is in Ankara. Ollie.
Yeah, that's right. We're at the NATO meeting here where we have the heads of 32 states, all the members of NATO here to discuss a number of different things. Of course, Iran hangs heavily over this meeting, but of course the focus here is hitting those targets, getting that defense spending up, and really sharing the burden across NATO. And we're very pleased to be joined now by Admiral Giuseppe Cavo Dragone, who is the chair of the NATO Military Committee. That makes you the ranking officer, military officer in NATO, and one of the advisors to Secretary General Mark Rutte. I'd like to begin with something that's been occupying, I think, a lot of your time over the last couple of weeks and will for the months to come. That is the U.S. troop withdrawal from the European continent. Trump has announced already some. The Secretary of War says there's going to be another review over the next 6 months. What is your expectation on how drastic those cuts will be, and how is NATO going to fill them in?
First of all, they will not be drastic because they have been planned and we knew it, and everything will be done smoothly in coordination with the alliance, and that will be something that it is pretty much natural for a strong and mature alliance. I mean, that will be done in coordination with us. And as Sakir said, I mean, our plans, which are the big issue, will be unaffected by this withdrawal, by this remodulation of troops.
And we talk a lot about capability gaps, but before we get into the capability gaps, I'd like to get into the manpower gaps that you might have in Europe. When we just look at the conventional militaries of Europe, Germany, which wants to be the biggest and the most powerful, has an army, a standing army of about 180,000 people, versus Russia well over a sort of 1 million. Is there the manpower within NATO to replace the United States? And how do you get those numbers up in terms of actual people willing to fight?
Well, all the nations are now facing this kind of issue, and I think they are in a good way and a good path to solve it, because you see from different, I mean, we are 32, so different nations there is, I mean, conscription, there is also reserve, and I think that the number will increase because that's part of the game, but all the nations are headed toward this goal.
And thinking about the capability gaps now, you know, a year after these sort of 5% commitments, obviously we've seen a lot of spending over the last year. We see the path sort of through to 35 to 5%. What are the gaps that are still concerning you and that need to be filled?
Well, first let me tell you that we are heading toward the 5% in a good shape, because this year, when we are speaking, all the average is at 4%, so it's a very, very good figure. The capability gaps that we are considering are well known. It's, I mean, deep precision strike, integrated air missile defense, stockpiles, and this is the issue that have been discussed and that have been generated a lot of contracts during this summit.
And thinking about also the sort of situation, the conflict in Ukraine, it seems that there's been a change of momentum on the battlefield. There seems to be rising pressure on Putin within, you know, economically and in other parts of the domestic sort of stratosphere within Russia. That does pose some risks to Europe in the sense that he's under more pressure. You see more sort of hybrid, and we've heard more warnings from, for example, Donald Tusk saying that you could see really some more action from the Russians over the next couple of months. How are you viewing and how are you assessing the Russian risk today? And how is NATO sort of preparing for that? Okay,
Russia is a threat and is pretty much involved in Ukraine, but we think that they will reconstruct. The situation there is more favorable to Ukraine these days. We saw it. There is a kind of reaction, I would say desperate reaction from the Kremlin to do something, because, I mean, that's the fact on a battlefield. It is. We are just working on this. I mean, we are heading toward a good level of deterrence. There is a run, and we want to win the deterrence run toward Russia, because they will rearm. So we consider that we have to project our activity up to the next year, when they will be in a phase of reconstruction.
And thinking about sort of more support for Ukraine from the NATO side, air defense has been the thing we've heard repeatedly from Volodymyr Zelensky. He'll be meeting with Donald Trump a little bit later. Do you expect that potentially the United States could step up? And if the United States itself cannot send more Patriots, for example, to Ukraine, does NATO have any capacity to support Ukraine in that way?
NATO has the capacity and will spend the most that we have, like we have done before, because we cannot give up now. Now it's the moment in which we have to support Ukraine at our best, like we did before. If United States will step in, I think that it should be asked to the United States. If they do, they are more than welcome.
And as you say, the average is at around 4% now. But of course, that is not sort of evenly shared. This is sort of the topic here is burden sharing. For those that are sort of not meeting the sort of spending targets and potentially not at this rate that the United States would like to see, how do you solve that problem? Because historically, obviously, being below 2% has been a problem that we really were not able to solve until quite recently. How do you get people to sort of meet those commitments in a timely fashion?
Well, I think that, first of all, the message is strong, as I told you. So it is something that should give us, a good feeling of what is our path. I think that it's a kind of, it will be in the future. We will be monitoring all the nation, of course, but it will be something that acceptable flexibility. If I'm not able this year to do something, probably I will recover in the next year. I think that this is something that we can consider because it depends on a lot of variables. Every single nation have to face, political, economical, financial constraints. So we need to be flexible up to a certain point, a decent point in which we allow them to move at the best to reach that goal by 2035.
And thinking about the summit going into next year, there's potential for that summit to be held in Albania. Albania is one of these sort of nations that's at risk of moving a little bit too slowly. Do you think that the summit will be held in Albania next year?
Well, I think that the summit will be held in Albania. If it will be held next year or the year after, it's something that is under discussion.
Well, thank you so much, Admiral, for your time today. That's Admiral Giuseppe Cavo Dragone. He is the chair of the military committee here in NATO, the sort of ranking military officer just ahead of those meetings of leaders as they walk into the building there just behind us.
Ollie, thanks very much. Bloomberg's Oliver Crook with that conversation coming to us from Ankara from the NATO summit.
OK. Wednesday the 8th. What else do you need to know? Let's walk you through the news. Bloomberg has learned that Microsoft is attempting to reduce costs by replacing OpenAI and Anthropic with its own artificial intelligence models in software products like Excel and Outlook. We're told that thousands of AI prompts in the spreadsheet and email applications are now being completed each week with Microsoft's internally built AI models. Hedge funds posted their best first half in 5 years. This despite many seeing sharp declines in March at the start of the war with Iran. According to data from research firm Pivotal Path, overall funds returned an average of 7.2% in the first half, led by a 27% average return for hedge funds focused on tech stocks. Did you watch the game last night? Did you watch the Egypt-Argentina game last night? Lionel Messi has led Argentina to a remarkable comeback. What was it, 17 minutes in that Egypt final? Argentina, I think, now face Switzerland in the quarterfinals. They trail by 2 goals. Honestly, we were trying to have supper at this point. Everybody was very excited about it. Egypt were up. They were 2-0 up, which was amazing. They had a goal disallowed. 11 minutes of normal time to play. Argentina came back, rallied strongly, scored 3 goals. As I say, Argentina, Switzerland in the next round. I think it's in Missouri. Looking forward to that one.
Which is more volatile, the scoreline or the Kospi?
It was an amazing game.
It moved like the Kospi today, down 5 up.
Yeah. I thought Egypt had it. It looked pretty strong. They completely changed the setup. They put defenders on. They were looking to defend that 2-0 lead.
Yeah. Going into the weekend, I asked the nerdy Bloomberg question about whose economy benefits most. Spain, Portugal, Switzerland, Norway, England. Did I miss any European countries still?
Six European countries are playing in the quarterfinals.
Exactly, in 4 days.
Yes. I don't know. It'd be nice to see a little bit of a bounce in the UK if we won it.
It would be nice. It'd be nice. I'm sure that any country that's still in it will be hoping for that. OK, so that's the football. 7:26 here in London. No games actually scheduled to take place today. Let's get back to the geopolitics. Coming up, the US and Iran trade fresh strikes. We discuss what the resumption of tensions could mean for the dollar with Kamal Sharma, G10 FX strategist at Bank of America Global Research. That'll be part of our conversation as we get into the FX landscape. The dollar actually pretty flat this morning, despite the fact we've seen a big jump in the oil price. More on that shortly. This is Bloomberg.
Morning, welcome back. I'm just getting the Kospi out. I just want to see where we are going into the end of the day. It's looking awfully like we're going to be closing in a bear market. We're now down by 5% on the Kospi. We're 30 minutes away from the start of European trading, which looks calm and muted and nothing happening here in kind of comparison with what we're seeing, certainly with the Kospi. Are we down 20%? I think we'll find out in the next couple of minutes as to whether or not we close in a bear market, but it's looking awfully likely. That's the European picture. Like the CAC's down by 0.5%. Is that a reflection of the political story? I doubt it, but we're down by kind of 3, 4, 0.5% here in Europe.
Let's have a look at the bond market story, because there we do see some interesting dynamics to discuss. So we saw a pickup in US yields on the back of the geopolitics yesterday that pushed oil prices higher. That continues to be the case. We have higher oil prices. 76 is the handle on Brent now, up by 3.3% after that resumption of attacks in the Middle East, that testing of the ceasefire. So we're up by 3 basis points on the German 10-year. We're up by 5 basis points on the French 10-year. And that perhaps is a reflection of the politics. We have heard from Marine Le Pen that she will be standing. So we'll certainly return to that conversation and think about where bond markets go from here as we digest all of the politics in Europe in the remainder of this programme. Let's think about what's been going on in the Middle East, though, because that's one of the dynamics that has been moving around the bond markets. The US launched a new round of strikes against Iran and blocked oil sales, with reports of Iran targeting sites in Bahrain and Kuwait. The flare-up in Middle East tensions reignited concerns over energy supplies, clouding the outlook for inflation and interest rates. Break-evens in Germany and the US on the move higher once again. Let's speak to Kamal Sharma, Bank of America G10 FX strategist. Kamal, good to have you on the programme. And thinking about this geopolitics, then, I wonder if we've put aside our concerns around inflation a little too quickly. What's your thinking around the inflation dynamic?
Yeah, I think markets have been really quick to pronounce the summer start of a relatively low volume environment. There perhaps has been a little bit complacency that the worst of the geopolitical story is behind us. I'm not sure that we go back to kind of March dynamics, but certainly I think this is a reminder that the post-ceasefire landscape is not just going to be one smooth line. And unfortunately, with events like this, that there is likely to be some skirmishes. So I think what this has effectively done has focused the markets back on the fact that there is some inflation concerns still lingering. It will keep central banks on alert for hiking, and vol probably is a little bit too low at the moment.
Right, and so does this feed into your thinking about how many hikes we get from the Federal Reserve? Are you still expecting a series of hikes, as I think you were some time ago? Are you still expecting that? And is that driven by this Middle East and the higher oil prices, or is this very much an AI US growth resilience story, perhaps, add in the fiscal dynamics and the World Cup as well?
Yeah, I think one of the defining features about the US economy, Anna, has been its relative resilience through this conflict. If you look at the labour market, particularly in last week's unemployment rate, you're looking at consumer demand dynamics. Our sister research organisation, the Bank of America Institute, is picking up strong consumer spending. Obviously, you've got the overlay of the World Cup as well, which will eventually fade. But there is a very strong story from the fundamental side, given in the US, which we think will trigger a Fed response. Now, I think the question is here, if there is a knock-on impact onto equity markets and this K-shaped recovery that we've been talking about for some time, does that start to see a bit of a retrenchment in the US consumer? We don't think so, largely because the US labour market, the US housing market are all showing good signs of stability, and that should support the case for a Fed rate hike towards the end of the year.
We're seeing significant volatility, Kamal, in the South Korean market. Potentially we're about to close in a bear market on the Kospi. I know this isn't G10, but if we start to see significant cracks forming in the AI trade, walk me through how that manifests itself in the FX story.
So the AI bubble has been one defining feature of the conversations that we're having across the board, whether we are on the precipice of something more so kind of more intense in terms of retracement. I think one of the key things here is hedging, and what we've been looking at is particularly in the yen, that this influx of AI-related stock buying in Japan, for example, and maybe that reflects in Korea as well, has been significantly associated with FX hedging. So you're buying the underlying and then you're selling yen forward to hedge your underlying exposure. Now, if that starts to unwind, I think that's where you may start to get some of these flows going in reverse. So in a way, it probably will be yen supportive. It could well be Swiss supportive as well. So we're looking at some ideas, we're kind of looking at what will be the reverse correlation. And given that the US dollar has been positively correlated with equities at present, it probably means that some of these funding currencies will start to reassert themselves.
Does that include the euro?
Well, you'd have to say probably yes, because part of that narrative has obviously been on the AI story, the growth story, which is obviously leveraged from US stocks. To be clear, our view is that we think that the path of least resistance remains for the dollar to rally into Q3. So we're looking at euro dollar around 112. But the risks are that positioning, potentially an unwind of some of these short euro trades. We are, as it stands, in a very conducive carry to vol environment, carry to vol getting unwound for the likes of some of the lower funding currencies such as the euro, Swiss franc and yen could be something to watch out for in the next few sessions or so.
Kamal, you mentioned the yen, and I want to get your thoughts a little more on what's happening there. So the broad picture is this dollar rally that you point out, but then there could be some yen-supportive dynamics from what we've seen happening with stocks and the read across there. I was also taken by an interesting line from our reporting, the Japanese government diluting its reference to monetary policy in its annual policy agenda, trying to get in the way of this commentary that seems to be developing that the Japanese government wants low interest rates and that there's nervousness about that, them stepping in the way of the BOJ. How are you thinking the yen responds to all of that?
So there's a couple of things going on here, Anna. We've been surprised by the ongoing weakness in the yen, largely because the balance of payments situation in Japan is improving. A simple chart of dollar yen versus the US 10-year will tell you everything you need to know. Now, I think that's probably going to be the more salient story in terms of the dynamics of dollar yen. If you look at our checklist of intervention, for example, everything is ticking the box bar one thing, and that's higher volatility. So the Bank of Japan, I think the market has been of the view that the Bank of Japan will be working in coordination with the government in terms of producing this fiscal stroke monetary backdrop, which is conducive to higher growth. But if you're asking whether that will be a precursor to further yen weakness, we think it's probably going to be any potential inflection point in US Fed decision making.
Come on, let's just talk about the UK for a moment. Nigel Farage is resigning and restanding in Clacton. I'm wondering whether or not this registers. Is this something that has a significant impact in terms of positioning around what we are going to see in the pound? If Farage and reform is defanged, how does that change the calculus?
So what we've been focused on in the near term, Guy, is any signs of rising geopolitical, sterling idiosyncratic risk premium. And our focus is actually on the change in potential leadership with Starmer resigning. This is just another story where it confirms our views that the market may be a little bit complacent about the near-term political dynamics in the UK. Sterling risk premium, which is idiosyncratic to the UK, looks relatively cheap at the moment. We're of the view that there will be some speed bumps, whether it's from yesterday's stories or whether it's from Burnham and his choice of cabinet positions. We're not out of the woods yet. One of the interesting points, though, about sterling, and if you look at euro sterling, it made a break below 86, the figure. The bid to UK PLC is unabated. Now, you can make that argument that UK stocks are undervalued and underowned, but cross-border M&A flows into the UK have been incessant, and that seems to be a key driver of euro sterling lower. Now, that comes despite the fact that we've had, periods of heightened political uncertainty. So actually, it does go to show that, the UK has some, real investment interest from the rest of the world.
Yeah. It's interesting, isn't it? Valuations matter. Kamal, thank you very much indeed. Kamal Sharma, Bank of America, G10 FX strategist. Just to confirm, ticking the box, the Kospi did close in a bear market. 72.46 was the close. It was down by 5.3%, Anna.
Now, European policymakers pledging to boost defence capability as President Trump renews threats to pull forces from the continent.
More needs to be done, that's very clear. But we are in constant contact with NATO that all these things don't happen so that we leave a vacuum or a gap really behind. So there are troop movements inside Europe, but it doesn't affect the overall capability of defence and deterrence.
That was Kaja Kallas, the European Commission Foreign Affairs Chief, speaking to Bloomberg late on Tuesday. Up next, we'll go back live to Ankara and bring you another conversation, this time with Maxime Prévost, the Belgian Minister of Foreign Affairs and Deputy Prime Minister. A real focus on defence and NATO this morning. This is Bloomberg. Welcome back. This is the opening trade with a focus on geopolitics and a higher oil price. We've had some new lines out of Iran just over the last couple of minutes. The Iranians saying that US actions render key parts of the ceasefire deal ineffective. So that's one of the lines coming out, and they say that the US is responsible for the consequences of any escalation. Let's turn to the markets in 3 minutes on the opening trade with our Asia Markets Executive Editor, Paul Dobson. And Paul, these lines coming out of Iran just to remind us to focus in on what's happening with the oil price. We're up at 76 is the handle on Brent right now. Does this put inflation fears back on the agenda if, for some parts of the market, they left?
Hi, good morning, Anna. Yes, I think it absolutely does. In fact, I would probably say that the most extreme market moves that we saw in reaction to the latest tensions or flare up in the relationship between the US and Iran was in the bond market, was in the government bond market. We saw a pretty big jump in US Treasury yields right across the board from 2s to 30s, up about 8 basis points in the session yesterday. Seeing a bit of follow through on that into European bonds today. The US 2-year yield is pretty close to the highest that it's been in more than a year. That is just sort of, the increase that we've got in oil prices is putting back onto people's agenda the possibility we'll have to have higher for longer US interest rates. The oil move itself was looking relatively contained. I'm not sure what these latest headlines will do, but it's certainly starting to pop up a little bit higher as well. Equities, though, I think they were following their own narrative. They weren't paying so much attention. So that's why I think, as you say, the bond market and the inflation risks is what's really sort of has people twitchy this morning.
Let's talk about the equity markets, though. Kospi just closed in a bear market, Paul. How's retail feeling? What's the kind of the next step here? We're below the 50 DMA. Kind of talk me through what people are saying around what happens next with that market.
Yeah, so I think for Korea, one of the telling points is going to be whether, having seen these valuations come lower, we see foreign investors starting to step back in being the dip buyers and replacing the retail traders, which are feeling pretty burnt at this moment in time. I think the other dynamic that you want to pay attention to in Asia's equity markets at the moment is this big rotation trade theme. So while the Kospi has been falling, we've seen a big rally in Hang Seng markets and Hong Kong markets today. The biggest world equity mover in the first few days of this month has been the Hang Seng Tech Index, the lowest or the worst performer, the Kospi. So that tells you that rotation trade's going on. People also looking again more favourably at India, Singapore as well.
And within the Asia space, as Korea tries to elevate the view of it from around the world, Paul, Indonesia facing a different fate.
Poor old Indonesia. It took another little bit of a body blow today. We heard from S&P, Dow Jones at S&P overnight talking about the idea that they could also consider demoting Indonesia to a frontier market status if it doesn't follow through on the reforms that it's already talked about. So it's kind of another admission that it's on warning and watch, although this one not quite so significant as some of the other indexes for Indonesia.
Paul, great stuff. Thanks for the update. Thanks for the comprehensive update. Paul Dobson, Bloomberg's executive editor for Asia Markets, joining us there. We're going to bop around a little bit and do various things and try and keep you up to speed with all the things that are going on. NATO leaders are in Ankara. I want to hand things back over to our Chief Europe correspondent, Oliver Krug.
Yeah, that's right, Guy. We spoke earlier to one of the sort of high-ranking military officials of the NATO alliance. We'll speak now to one of the politicians, Maxime Prévost, who is the foreign minister of Belgium, but also the deputy prime minister of Belgium. Thank you so much for joining us at the sidelines of the NATO meeting. I'd like to begin to speak about what we've just seen over the last 36 or so hours, the war in Iran, sort of rekindling of the sort of hostilities, and like to get your perspective, A, on how you see the conflict right now and what the conversations are between Europeans about the path forward.
Well, frankly speaking, the situation on the ground is really concerning. Of course, the attacks that had been launched by the Iranian authority as totally unacceptable. So I can understand why it was necessary to reply and to also take countermeasures. Belgium is ready to take its part in the security of the Strait of Hormuz. We are part of the coalition of the willing.
We put some detail on what that actually means, because we've heard that a lot, and it's not clear to me sort of what roles are being active and what conditions would have to be in place for that role to be activated.
The decision of the government of the Kingdom of Belgium is crystal clear. We've decided to take our responsibility, being part of the coalition of the willing that is currently led by France and the United Kingdom. We've decided to provide support for mine-hunter vessels. Some of those vessels are currently pre-positioning in the region in order to secure the Strait of Hormuz. But of course, we mentioned two conditions: a kind of international coalition, that's the case, and a peace agreement with lasting efforts. And that's the situation we, for the moment, currently assess, because we've seen that MOU have been signed, and we commend all the efforts made by both parties, and especially the US, in order to achieve such an agreement. But on the ground, the situation remains fragile, and it's necessary to pay very attention to that.
And onto the business of this NATO summit. It's all about commitments. It's about burden sharing. Belgium historically has been a lagger on defense spending. That has obviously caught up to a certain point. But you're also in very tense and heated budget negotiations at the moment. Talking about 5% spend, that is significant. When do you get to that figure? Will it be enough to satisfy the President of the United States in those very difficult trade-offs you're going to have to make in Belgium?
Well, frankly speaking, it was too long with no tangible result from the Belgian side, but now it is achieved. We have such 2% and also 1.5% extra for security-related measures. Achieving the 5% target will not be realistic for the Belgian authority, considering the tension we have on national budgets. But we will continue to increase our spendings for the defense, not because we fell in love with the defense sector, but because we have to be clear-headed on the situation on the ground, the threats coming from all over the world, and especially from Russia. And it is why we've decided also to increase such spendings and to be a reliable partner within the NATO alliance.
And on the threat from Russia, earlier this year you seized an oil tanker from the Russians, while at the same time your Prime Minister has talked about opening diplomatic channels on the European side. What is the path to peace in Ukraine? Do you need to see more pressure activity like that, seizing tankers, while also opening dialogue? What is the
For
position?
too long, Europe has acting like a payer more than like a player. And I think the wake-up call we are facing really is the right moment in order to open a dialogue with Russia in order to achieve a peace agreement. That's the only manner to achieve tangible results through diplomacy, but also through deterrence. And it is why increasing the spending for the defense sector is so crucial. Because if you do not have security, you do not have the foundations for freedom, for prosperity, for social protection. So we are currently within the EU discussing about who can embody the EU voice, let's say, in such kind of dialogue.
And I have a final question for you, because you're Foreign Minister of Belgium, and former title that we did not sort of list here was a soccer referee. Obviously, we've seen the reversal by FIFA of the red card after a call from Donald Trump. I'd like to just get your sort of reaction from that and what the world of soccer can tell us about the world of geopolitics.
Frankly speaking, I've been myself in the past, when I was young, a former football referee. So I know that's how important it is to respect the rules of the game. So we have been shocked by this decision, but finally we've seen a kind of victory of the rule of law, and that's the most important. But of course, I think that everybody needs to respect the same kind of rules in order to avoid disruption in the way we are playing together.
And just in 2 seconds, the match is on Friday. What is your prediction for the outcome, Belgium versus Spain?
I hope that thanks to the presence of our king in the stadium, we will win 2-1.
2-1, very good.
Cross the fingers.
Foreign Minister of Belgium, Maxime Prévost, thank you so much for your time. They were talking a little bit of geopolitics and, of course, a little bit of football.
Yeah, reflecting on the new world order in many ways at the NATO summit there. Bloomberg's Oliver Crook, thank you, of course, for that really interesting conversation. I'll just draw attention as we head towards the start of European trade then, Guy, to the fact that French spreads, OATs over bonds, just edging out a little bit on that news that Marine Le Pen is going to stand. Of course, we've seen higher yields across the European bond market, so there's a little bit in it, but not much.
There's a little bit. So France does stand out a tiny bit, but yields are up pretty much across the piece. I think is probably the narrative that we're watching as we watch what is going on with the oil price, which is watching what is happening in the Gulf. 5 minutes away from the start of trading here in Europe. Futures are a little negative, and we'll deal with the details, what the market open looks like in just a moment. This is Bloomberg. We went up, then we came down. This is the session yesterday in the United States. We're a couple of minutes out from the European Open, so this is worth paying attention to. We went out here. It then looked like we were going to get a pretty decent rally into the US close. That then petered out as we started to see hostilities bubbling up again in the Gulf. That took the shine off equity markets at the back end of the session. The bond market obviously reacted to that as well. Where does that leave Europe this morning, therefore? Actually not in a particularly positive place. Euro Stoxx 50 futures are down by 0.5%. FTSE's a similar story. I'm interested to see how the oil stocks trade today. DAX futures down by 0.7%. You're also getting a fairly decent market reaction when it comes to what we're getting in terms of European government bonds. We'll get gilts opening shortly. There's a lot going on this morning, Anna.
Yeah, absolutely. The politics story, along with the higher oil price, having that impact on bond markets, as you say. And it's at the 5-year horizon that we're up by 6-7 basis points or so, reflecting perhaps a return of inflation concerns. What does that mean for stocks? We'll keep oil stocks in focus as a result of that. Oil stocks could be certainly something that we are watching this morning with a 3% move in Brent. Defence also in focus. We've got, of course, further attacks in the Middle East, but then President Trump talking about peace in Ukraine and getting closer to that. So how does and we've got a NATO summit, of course, taking place. So we keep an eye on what's going on with defence stocks as well. And Lufthansa is certainly worth keeping an eye on. Guy, we've got some comments coming through from Citi on that front. They've downgraded it to sell from neutral. They say that the valuation seems less compelling following the recent stock rally that we've seen in that particular aviation business. And of course, with a higher oil price, we'll watch all of the airlines.
Absolutely. That's a key factor, key input for that sector. Tech also could be another story. There's a lot going on this morning. How does it all get priced into Europe? Let's find out. Let's show you what the market's opening trades look like. The FTSE 100 is expected to be down by circa 0.5%. What is going to be the story in all stocks this morning. I think is going to be fascinating. We'll see exactly whether or not the market believes that this recent rally in crude is sustainable. How much further could it go? We'll watch that one carefully. So we're down by 0.2% on the FTSE 100. Elsewhere, the CAC has obviously got to price in a bit of politics as well. We'll see how the luxury sector performs this morning. And then we're going to turn to Germany and what is going on there. Plus the AEX, interestingly enough, up by 0.1%. I'm interested to see how ASML trades this morning. Didn't have a particularly good day yesterday. Do we get a bounce back? The IBEX is down by 0.5%. We'll wait for Germany. We've got a lot to price into the German market this morning. Anna, what are you seeing in terms of the sector story and the single stock story?
What I am seeing in terms of the sector story is real outperformance from energy stocks, which will come as no surprise to anybody. So with the oil price up by 3%, it is in fact the only sector in positive territory. The sector is up by 1.9%, really stands out on the European landscape this morning. We've got Repsol, Aker BP, Saipem, Eni, BP, all of these stocks are up by more than 2.5%. So the market is looking to readjust expectations around that higher oil price. And just earlier this week, we saw what these higher prices and the volatility in these prices can do for some of these businesses. The likes of Shell, for example, telling us at the beginning of this week about the gas trading successes it's been having. To the downside, we see the banking sector, and SocGen is down by 2.3%. We think about bond markets when we see the banking sector on the move decidedly in one direction or another. Deutsche Bank also down by 2%. So we wonder if we've got any read across there. But those are the two at either end of the sector picture. I was just looking at where travel and leisure had put itself, and we've got some of the airline names, yes, a little bit weaker this morning. So IAG is down by 1.9%, for example.
We're rotating out of some of the defensives, some of the pharma. You talked about pharma earlier on the show, the fact that it did relatively well in the US yesterday. Very under-owned sector recently, started to come back a little bit as we see this rotation maybe out of tech into areas that are more defensive. So you've seen the grocers doing well, but certainly the pharma sector has been a big beneficiary of that. That is coming under pressure this morning. Roche is the biggest points drag on the stock 600 this morning. Not down by a lot in terms of percentages or points, but that sector is significantly under pressure. You are seeing some stabilisation in ASML, which I think is interesting too. Yes. After a big drop yesterday, that stock showing signs of stabilisation.
And here's an interesting move, because we do have the technology. To your point about ASML, the technology sector is actually the second best performing sector in Europe today, which on the back of a 5% move lower in the Kospi, 5.3% lower on the Kospi, a bear market on the Kospi, maybe that's not bad. And what is interesting is it is Prosus that is moving higher by 3% that is helping with that. This obviously has a lot of China exposure, and we've talked about the rotation into Chinese tech.
Take a look at ASML over a 2-day basis, though, and it's still down by 7%.
Yeah.
So it got battered yesterday. So today we're not bouncing, we're just stabilising. And the fact that we're not bouncing, I think, is not a particularly positive spin to put on maybe that sector.
Let's think about these markets then broadly with Christian Muller-Glissman, Goldman Sachs Asset Allocation Research Head, who we're pleased to say is with us on set this morning. Christian, very good morning to you. Let's start with thinking about where we are on the AI theme. The Kospi now in a bear market then. We've seen lots of talk about rotation recently, whether that's, we started out rotating from hyperscalers into memory stocks. Now we're selling memory stocks. Some people going back into hyperscalers, some people casting the net a lot wider, thinking about pharma, banking stocks. How are you thinking about AI and how it relates to the rest of the market at this point?
AI, and as often tech, is the most important structural trend we have. And it's the most important driver of equities and possibly portfolios now, because tech and equities are getting bigger and bigger in portfolios. But it's going through cycles. And I think it's going through cycles within the AI ecosystem. It's going through sentiment cycles. And I think that's a bit what we're dealing with here. I think you had a very cyclical element, like memory chips, all this kind of CapEx spend, take over as a driver. And as you were saying, the Mag 7, the hyperscalers actually came under pressure. They've been really underperforming. And I think that's reversing a bit right now. It got a bit extreme, like the momentum behind the semis versus the kind of software, the momentum versus semis versus the hyperscalers was getting a bit extreme. The positioning was getting a bit extreme. We looked at this, levered positioning, levered ETFs, options, retail. And I think that's reversing right now. But I think the overall structural trend around AI, in our view, is intact. And I think the hyperscalers are quite well positioned right now because they still own a lot of the infrastructure. A lot of that ecosystem is tied to them. So the big concern people currently have is, what if they cut back the AI capex? Is it really bad for the semiconductors? Probably it's not going to be great. And we have to be honest, they had like a blistering earnings growth. But it might be quite good for the hyperscalers to start talking about efficiency and to start talking about focusing on monetizing the technology rather than just spending.
OK, so is that where we go back to? We went from hyperscalers to memory. Now we go from memory back into hyperscalers, or maybe just at the margin?
I think what will happen, as always the case, in a late cycle kind of tech revolution is dispersion. I mean, the dispersion is just shocking, what you see between some of the Mag 7 even, and obviously between the different sectors. That will continue. There will be winners, there will be losers. Some companies might decide to step back a bit, kind of outsource some of their AI research, maybe give their cloud computing, their data centers away. In terms of capacity, you heard some comments on that recently. So over the next few months and possibly longer, there will be a lot of dispersion. And I think you're right. In the very near term, I would not be surprised if the Mag 7 or the hyperscalers will trade a bit better, and if the semiconductors continue to be quite volatile.
When do the customers of all of these guys, I'm talking about the whole AI ecosystem, start to benefit? Because I'm not seeing that yet. Torsten Schlock had a nice note on this yesterday. At some point, all of the users of this stuff need to start making money from it. You need to start seeing productivity coming through. We're not there yet. It's not showing up. How long can we wait for it to show up?
Well, the sad story is it's in every technology revolution like this. When you go back in history, it usually starts with the technology coming out, a huge investment phase, which often permeates the whole economy. And then there come the doubts. And the benefits are not fast enough. The same was true with the internet, obviously. It got very extreme, though, with the internet, because a lot of the stocks that were driving the market higher were call options on the technology that didn't actually have any earnings, were unprofitable, which meant that you had a much more bubbly type market. This time around, the spending is already driving earnings, and you have less of the market cap in these call options. But eventually, what then is the risk is exactly what you said, that the benefits are not coming fast enough. I would say right now the benefits are still exploratory. I think what we see being done at our firm or at all the corporates we look at commentary at is somewhat exploratory. But the technology we all know is useful. And has multiple kind of like potential iterations that can happen. So from that perspective, we are still in that phase where it will be difficult to convince investors that the benefits are there. You see this, how the companies that should adopt and benefit the most from AI are trading. We have a basket for that. These companies are not outperforming. They're not really benefiting at all from the idea that they should benefit from AI.
Are earnings expectations too high?
Listen, I think, to me, the bar is obviously high for this earnings season. I think we expect, like consensus expects for the US, 22% year-over-year earnings growth. Last quarter, we had 17. That was a big upset surprise. Our team, however, do think that the expectation is 24%. They can clear the bar, but it obviously means the surprise will be smaller. Expectations are higher. It's more difficult to actually, purely based on earnings, see an enormous amount of rally now. It's about forward guidance. It's about like, what are the companies actually saying? Are there kind of like trends? Are there certain decisions that are being made? Because often when you're late cycle, earnings revisions keep going for quite a long time, and they surprise, and there's restructuring, there's releveraging, and all of those things to some extent can keep the corporate sector going. So that's a bit the expectation. But this big kind of major earnings surprise wave linked to AI capex is probably closer to the end.
And Christian, what assumptions do you make about inflation, energy markets? We're seeing the latest attacks in the Middle East ripple through all of these markets, with an oil price up by 3%, bond yields up. We're up by 5 basis points in Germany. We're up by 7.7 in France. Gilt markets opening, same dynamic, up by 5 basis points here. How are you thinking about the European bond market challenges as a result of this higher oil price?
Yeah, no, I mean, what we've always said to investors, not just now, but probably for the coming years, it's all about balancing innovation with risk from inflation in portfolios. Because we are not anymore in this friendly Goldilocks backdrop of anchored inflation and good earnings growth. And I think now, inflation will come back regularly. It can be linked to geopolitics. It can be linked to bottlenecks, inefficiencies, decarbonization, demographics. But in summary, the Middle East conflict, while we're all hoping that we're at the end of it, will probably have the occasional flare-ups. The baseline has to be that we're through the worst and oil prices are going to be more range-bound from here. And I think what we need to watch very carefully is the long-run inflation expectations. I'm sure you've seen the 2-year break-even inflation in the US has actually gone below 2% just a few weeks ago. So it's actually indicating that inflation is not only not a problem, it might actually undershoot the Fed.
Do you believe that?
Listen.
Does it feel like that? Does the world feel like it's disinflationary at the moment?
It's a good question. I always say there's obviously measured inflation and then there's the felt inflation. It never really feels like we live in a low inflation world, even if inflation is at 2%. But I would say that the inflation that matters for the Fed, which is influenced by shelter, which is influenced by all kinds of wage inflation metrics, there's a good chance that in the next 1 to 2 years, that will not be a problem, taking the oil price problem out. But the problem is the oil price problem will probably occasionally flare up.
OK, nice to see you. Always great to see you stopping by here. Thank you very much. Christian Müller-Glissman, Goldman Sachs Asset Allocation Research Head. Thank you. Quick look at the Core 6. What are we looking at this morning? It is a really choppy market out there. Some really interesting themes developing. SML is stabilising. We're up by 0.8%, but it got smashed yesterday. Elsewhere, there is significant weakness across the piece when it comes to most of the European space this morning, except in oil. Chloe, over to you.
Good morning, Guy. Indeed, oil is doing very well, and that's because this US-Iran deal is looking quite fragile at the moment. The US has been striking targets in Iran following attacks on ships in the Strait of Hormuz, and so this indicates that perhaps this peace agreement is not going to hold that for that long. And then we also had Shell earlier in the week signaling that it had a very profitable second quarter. So there's a lot of kind of positive sentiment around this oil industry, this oil sector, and we can see that reflected on that board here today, with Repsol in particular over in Spain up about 3% this morning. Moving on to Lufthansa, which is down this morning. The airline is down about 3% after being cut to a sell rating at Citi, with the analysts saying that the recent rally has made this valuation less compelling, and therefore they're saying to sell the stock. So we're down a little bit there. On the other hand, though, staying within that airline sector, Jet2 is doing very well this morning after earnings were up 9% after strong results that came in line with expectations. It said that the summer season is looking very good and also announced a £250 million buyback. And so we are seeing that reflected in those shares this morning very strongly. Staying in the UK, but going to a different sector with the home builders, and Vistry is down quite significantly this morning. We're down 8%. The CFO is leaving. The CEO has started this business review with the results set to be laid out in September, and it is really struggling under the weight of those rising costs for raw materials and also just this lack of demand because of mortgage affordability problems. And so we are seeing this company take quite the hit this morning. It expects a pre-tax loss of £30 million, so that's not insignificant. And finally, Pirelli, the tyre maker, is also down this morning, down about 3% after being cut to sell rating by Citi analysts, with the analysts saying that the year-to-date performance was very, very strong. And so this is a very similar story that they have for Lufthansa. So this valuation may be being a little bit less compelling at the moment, even though the defensive characteristics of this company are still very strong.
Chloe, thank you. Chloe Melly with those stocks that are moving this morning. Coming up, we'll be back to the defence theme. NATO agrees to billions of new defence deals to appease President Trump. We will have more details next. This is Bloomberg. Welcome back to the opening trade. 17 minutes into a session here in Europe that shows some marked weakness in some parts of the European space, on the DAX in particular. So we are weaker there. And in fact, most sectors are in negative territory. The energy space stands out as one of the areas where we're gaining because the oil price has a 76 handle, up by 2.9% on Brent. So that's one of the areas we're focused on, Guy. But of course, we have also been very focused on what's been going on in Asia and bear market on the Kospi now.
So you've got a bear market on the Kospi, but you also got this interesting rotation into Chinese tech. So Baba, which is going to be interesting to see how it trades in the States a little bit later on as well, having a really solid session. Anthony Stevens joins us now to give us his take. So here we are. We're in a Kospi bear market. I'm looking at the 2-time levered SK Hynix down by circa 50%. I've got a rotation into China. What's going on?
It's quite a decent mirror of the US price action, where you saw the hyperscalers doing well and the semiconductors selling off. And that's been a trend that's kind of widened as we went into the second half. And that plays to this rotation from one half to the other. The really big winners from the first half are getting sold off to fund some of the purchases of the laggards of the first half. And in Asia, that is obviously Korea versus Hong Kong. Korea specifically, foreigners have been dumping shares for quite a while as they take profit, but now there's increasingly less profit on the table. They've been selling for 12 days straight, and now we're at $102 billion year to date. Today, we see bigger swings than ever before. Hynix was trading in an 11% range. There is a fair bit of drama intraday in the Kospi now. Yesterday, we had a limit down halt. Today, we had a sidecar to halt program trading. So the intraday volatility is also very high. If you had got me on the show at like 9 o'clock, the Kospi would have been up on the day. So it is really a rather extraordinary period of volatility in Korea, which in itself is going to constrain position size. You have Kospi vol trading above 80 for an extended period of time. That's 3 times more than, say, Hong Kong, for example, and 5 times more than the VIX, right? So if you're going to have your biggest, most high conviction positions in an 87 vol index, you will have to reduce the size of the index, size of your position. And that's what you're seeing traders in Korea do.
Yeah, quite a bit of drama in the session. Whippy is the word you often use to describe these things, Anthony, which maybe applies today as well. What about the SK Hynix ADR? Is this helping or hindering what we are seeing on the Kospi right now?
Well, it was quite a high-quality book as far as these things go, right? So there were deep tech investment thesis players in there, like situational awareness. There were properly long-only players like Bailey Gifford, and they've locked down $7 billion of the $28 to $29 billion. So from a book perspective, the book is being placed. It looks like it's multiple time oversubscribed through multiple reporting. So in terms of the ADR itself, it's quite a solid job done by the ECM desk across the street. But as a catalyst now, that's passed. So what the question the street is asking is, what else can you show me for a semi-cycle that is being debated, whether it is cyclical or structural? And that debate can only be answered on the technology front. And while that question is really up for grabs, you're going to see this extended volatility, and we're going to see every single kind of technology headline drive price action. For example, today we saw in China a rash of announcements around custom chips.
Okay. How does retail handle this in Korea? It's been a big part of the market. We're below the 50 DMA. Technicals don't look that good, but we've seen buying in this kind of pocket before. Anthony, what is the retail trade here?
Well, the retail trade is to buy at the 50-day moving average and hope that things kind of reassert themselves. They managed to do that quite successfully all the way up. The trip below the 50 DMA has been relatively short, and the last time it happened, we rallied 40% from there. So there is some decent precedent. We are very close to retracing kind of technical support on the medium term in both the Kospi and the leveraged ETF, but they need foreign support at some point to turn, and that has not occurred. We continue to see foreign selling on the downside, and as I mentioned, I think it will take fundamental or technological changes to turn foreigners around. Now, the threat of rotation hinders that. If Alibaba starts rallying 12%, Tencent starts rallying 5%, or the hyperscalers start rallying 3 to 5%, that puts a lot of burden on incremental money going into the memory trade.
Anthony, thank you very much. Bloomberg's Anthony Stevens with the latest on everything we've seen in the tech stocks and the rotations within and out of. Let us talk about the defence sector, another very newsworthy sector this week, because, of course, we're watching NATO. We are ready for any kind of news flow surrounding NATO, so we'll keep you across all of that. Now, European defence names remain on investors' radars as Trump and Zelensky plan to hold talks at the NATO summit later today. Meanwhile, the UK, France and Germany have launched a $50 billion NATO initiative to spur the development of long-range weapons without US involvement, aiming to close the gap in an area where Russia is well ahead. Jerry Doyle, Bloomberg's global defence editor, joins us now for some analysis here. And Jerry, when you look at these headlines around what's being done here around long-range weapons, Russia ahead, so there's the need to cooperate and do this. It's without the United States, and that's perhaps, to try and impress President Trump that the NATO European allies are doing something. Does it look very different to previous programs, though, that we've had on this front, or is it quite similar?
Well, a couple of years ago, a conglomerate of European countries launched an effort called ELSA to develop long-range strike weapons as well. It's not clear how that coordinates with the $50 billion program that was announced yesterday, but they both aim to do the same thing, which is close a major gap. Right now, European countries collectively operate, their long-range strike is mostly this cruise missile called Scalp and Storm Shadow in the UK. Those stocks have been heavily depleted by the Ukraine war, where many of these missiles have been donated to Ukraine for use. Meanwhile, they only have a range of a few hundred miles, whereas something like the Tomahawk or the cruise missiles that Russia routinely fires have ranges of well over 1,000 miles. So that's a gap Europe needs to fix and needs to address, and these two programs ideally would dovetail into a weapon that can close that gap.
Let's talk about the 54 billion that the Europeans are talking about spending. I bring up dollars because that feels like it's a significant currency. They're trying to spend this in Europe. How coordinated is that spending going to be? And where can we do it here in Europe? Can we satisfy all our requirements with European programs?
Well, the long-range strike aside, which I think it's not clear how those programs are going to interact with each other. A lot of this other spending does feel fairly coordinated. It's looking to address what we call sort of strategic enablers, things that help militaries coordinate and magnify their combat power, things like integrated air and missile defenses, strategic airlift, in other words, planes that carry troops and hardware around, tankers to supply planes and keep them going farther, AWACS, which is airborne radar systems, ISR, which is intelligence, surveillance, reconnaissance aircraft to keep tabs on things. All of these deals address that. You have Saab making AWACS planes. You have another massive deal. TKMS is going to make 12 submarines for a NATO member Canada. And then you also, of course, have some spending that can't be addressed by European primes, which is buying these Triton long-range maritime surveillance aircraft from Northrop Grumman. So although most of the spending is focused in Europe, there's still some areas that European companies...
But if you're a US prime right now, if you're Boeing, Lockheed, Grumman, kind of these kinds of companies, it looks like Europe is becoming a much more difficult sort of market to access.
To some extent. I think the primes in the U.S. are still going to try to, at the very least, find JVs that they can operate within Europe to make things like munitions, to make aircraft components, and things that they're already doing. So I don't think they're in danger of being completely frozen out. But from the Europeans' perspective, it makes a lot more sense to be able to generate these strategic capabilities domestically.
Jerry, great to catch up. Thank you very much indeed for your insight. Jerry Doyle joining us on the defence story. Coming up, a cooler reception from Amazon's latest bonds. It's the pushback raising questions about the limits of investor appetite for that debt. We're going to discuss that next with Paul Horvath. He is the CEO and co-founder of Orchard Global Asset Management.
Yeah, indeed. And we can think about where are we worried about this AI debt pile? Do we think it's a bubble? And if we are worried, which of the issues are we worried about? Is it neo clouds? Is it the more hyperscaler end of things? So we can get into that conversation.
Yeah, there's an awful lot of it. Data center debt is a big theme, and we'll talk about it next. What else do we need to worry about? That's another question we should maybe address too. That is the conversation we've got coming up. What are we, 26 minutes into the session? This is Bloomberg.
Welcome back. This is the opening trade, 30 minutes into today's session. Let's have a look then, Guy, at where we are on these European equity markets right now. Stocks Europe 600 down by 0.7%. If you have oil markets and you have oil stocks, then they might be doing okay today because energy names are doing well today on the back of a 3% move higher in the Brent price. So perhaps that cushions you a little bit on the FTSE 100, but as you can see, not by much because we're still down by 0.7%. The CAC 40 down by 0.8%. The DAX down by over 1%. So we're selling most sectors today, Guy, and it's not necessarily the technology theme that we've seen weakening over in the Asia session that is leaking into the European space, but we are considerably weaker, down by 0.7% across these markets.
Let me continue with the bleakness. You've got 504 stocks down, you've got 85 stocks higher. That tells you in terms of the split what is going on. Volume's actually reasonably high this morning, which is also quite interesting. So we are selling and we're doing it on relatively high volume, certainly compared with the recent days. So this is a market that is definitely under pressure this morning. Anna said it. If you're an oil producer this morning, you're having a better day. Repsol is but one example of that. You're seeing Repsol up. You've got BP, Shell. These kinds of names are also having a better day. Interestingly enough, Jet2's up as well on an update, which seems to be a little bit better than anticipated. And I show you ASML, the giant lithography company, up by 1%. That makes you feel like tech's doing well today here in Europe. I would urge you to do GIP2 if you take a look at that stock this morning, because actually on a two-day basis, it is heavily down. It got battered yesterday. Today we're stabilizing. I think 1% equals stabilization at best. Lufthansa's got a downgrade and it's got a higher fuel price this morning. Two things that you don't necessarily want to see if you're an airline. Vistri's down. We've got senior management changes at that business. And you've also got a tough outlook for the UK economy. Take a look at what is happening with the bond market this morning. You are certainly seeing European government bonds under significant pressure, and Kering down by 0.8%. This is a market that is definitely skewed to one side of the boat, Anna, and that side of the boat is the one that's maybe leaning into the water, underwater, should I say. What do you got?
Let's talk about the source of that higher oil price then, Guy. Some of the other stories we're covering this morning. The fragile ceasefire between the US and Iran is facing its biggest test yet. Washington says it has completed a round of offensive strikes against Iran. The US military said the operation was in response to attacks on 3 commercial vessels that were transiting the Strait of Hormuz. Iran's foreign ministry has responded, saying that the US actions render key parts of the ceasefire deal ineffective. It's the second day of the NATO summit in Ankara in Turkey. US President Donald Trump and other leaders are set to discuss topics ranging from Iran to support for Ukraine and the ramp up in European defense spending. And the AI rotation trade is gathering pace in Asia as investors pull money from chipmakers that powered this year's rally and hunt for cheaper ways to play the tech boom. This shift pushed the Kospi index into a technical bear market after gains that made it the world's best performing major benchmark this year. Guy.
Anna, thank you very much indeed. OK, let's give you some breaking news regarding the banking sector here in Europe. This relates to the Unicredit Commerzbank bid. Unicredit saying it has reached 47.59 in terms of the percentage stake that it now has in Commerzbank. Now, that includes some derivatives. This is as the bid process comes to a conclusion. Unicredit saying that Commerzbank shareholders tendered at approximately 17.6%. So we will watch carefully as to where we go from here. Is this over? Is this nearing a point at which we're getting to some consolidation, cross-border consolidation in Europe? Not quite there yet.
Yeah, how far can this go without the support of the German government also seems to be an important question to think about here. We are 8:33 here in London. Let's think about the AI trade from a different angle. Amazon's $25 billion bond offering drew demand of just 1.6 times the deal size. That's below US high-grade corporate average of around 4 times this year. That's according to Bloomberg compiled data. The deal lifts this year's global AI-linked debt sales to around $335 billion. Yet the muted reception raises doubts about investor appetite for debt, even from the highest-rated hyperscalers. Let's think about what this tells us about appetite for debt and the AI sector. Paul Horvath is with us, CEO and co-founder of Orchard Global Asset Management. Paul, really nice to have you on set with us. Thanks for coming to see us here in London. So, I mean, when we hear these headlines around the scale of the raise that we've seen in bond markets for the AI build out, for the data center build out, is this a growth opportunity that you see it's advantageous to be involved in, or do you just say, no, that's not for us, we're not playing in that side of the credit markets?
Well, first of all, thank you for having me here. It's great to be here on this steamy London morning. Yeah, look, I think on the debt side, we are late stage in that trade. At Orchard Global, we were very focused on funding the early stages of what you want to call the tech boom or the AI boom. You could get very compelling data center investments. We like to do hard asset lending at Orchard. 10, 12 years ago, lending to data centers, and indeed even lending to chips and chips manufacturers, that was an interesting risk reward. It doesn't surprise me that there was only 1.6 times on the Amazon, because in the U.S. and in AI debt, it's getting late stage in that trade. And really, we think, if you think more broadly, more globally, if you're going to invest in tech or you're going to invest in growth like you've been seeing in the U.S., that's more of an equity play or a private equity play or indeed a venture play. Certainly the early investors, venture investors in SpaceX are feeling pretty happy right now. So we actually are we're reducing that type of lending, getting more to more traditional, boring, industries, manufacturing. And quite frankly, we're seeing a lot of opportunities more here in Europe.
Okay, and we will certainly talk about those. But just to linger for a moment on the AI build-out story. So I know that you've stayed away from a lot of the software names because you like to lend into more asset-heavy businesses, and they're too asset-light. So in the sense, data centers, they're pretty asset-heavy. This is a different kind of tech theme, but it depends how much those assets are worth, I guess. And are you concerned about the values attached to those data centers?
Well, yeah, and the difference, it's a very good question. The difference is this. 10 years ago, when we were lending to a data center, we really weren't lending to the data center. Yes, there's assets and there's chips and so on. We were lending to, you name it, Microsoft, Google, whoever, which was taking that lease. And we could make a loan. It was secured by that 20-year commitment, by that, then AAA, now AA rated. Now they're saying, well, there's lots of competition. We don't, the devil is in the details in lending. So we still do that, but we are much more cautious now than we would have been 5 or 10 years ago.
What do you mean by late cycle?
Late cycle, here's the question, and it is we used to say the $64,000 question. Now it has to be the $64 trillion question. It is amazing. The word centibillionaire didn't even exist 10 years ago, and now we have trillionaires. I think there's something like $650 billion that has gone into the AI build-out. And there's a debate whether that's too much or too little. But we're certainly not early cycle. And, you're beginning to see structural limitations. Not only how much of this do we need, but, how much can we produce. In my home state of New Mexico, many traditional builders have just gone tools down because literally all of the electricians, all of the plumbers, all of the carpenters, they're down at the you name it data center in southern New Mexico getting paid. And it's great for them, $180 an hour, but it's kind of crowding things out. So it just feels like we've invested $650 billion. I don't think there's about to be another $650 billion invested.
Okay, let's talk about civilization decline.
Well, and here's what I want your viewers to understand. Europe is and this is blinking red light type of stuff. Europe is in a structural, not cyclical, structural decline, the rate of which and the decline of which we haven't seen for, I'm going to say decades to sound credible. I'm going to say centuries.
Right.
This is, and look, as unhappy as that makes me for my European friends and family, it creates some really unique and interesting investing opportunities, if you know where and how in those companies and industries to help them manage this decline.
Right, and there's no choice in that then. So this is just about managing a decline.
Well, yeah.
I'm torn between whether I want to ask you more about those opportunities, but just to linger on what makes you so convinced about that. What are the red flashing lights?
There's two stats that I think that are, and it really relates to your breaking news. If you're a policymaker, I'm not going to take sides on who's going to win this merger. Mergers need to happen here. Consolidation needs to happen. There's not enough capital funding this, multi-$100 million, civilization. But I want to just, sometimes it's good to just take our heads off the screen, look up, and let's just look at some big picture numbers. GDP per capita. In 2000, U.S., Germany, U.K., about the same. U.S. a little bit higher nominal, maybe less than now. U.S. GDP per capita is 80,000. Europe is half. It's 40,000. If Germany, one of the wealthiest countries, were a U.S. state, it'd be ranked number 48 on GDP per capita.
And this is an experience that any European visitor to America is very quickly aware of when you try and vacation there. But from your perspective then, Paul, what are the opportunities that this throws up for you?
And it really relates back to the conversation we're having before. In the U.S., there's growth. There's problems. The U.S. isn't perfect by any stretch of the imagination. But when there's growth, you want to invest, as I said before, equity, private equity, venture. Europe doesn't have growth, but it has wealth. So if you have wealth without growth, then making senior secured loans to these companies that have lots of downside protection if something should go wrong, because in debt, things always go wrong. They have to pay up. For an example, we made a loan, defensive sector, food processing. No matter what Iran does or where oil prices, people still need to, buy mozzarella sticks. So we did that. Lots of downside protection, 60% subordination, leverage about half that you'd see in the U.S. Covenants, you have them. It's hard to get covenants in the U.S.
Yep.
So that's about half as risky as a U.S. loan. In the U.S., I'd get 2 or 3% over cost of funds.
Yep.
In Europe, I'm getting 6.
Doesn't it feel like the 1920s to you in the States, though? Doesn't it feel like that kind of exuberance that we've seen historically, that it goes too far? Europe is doing this. The U.S. kind of does this, but then does this. Isn't there the risk that happens? Isn't that the greater threat right now?
Oh, I think that's very much the case. And I don't know, I'm a debt person. Is there more risk in the U.S. equity markets or bond markets? I'll leave that for somebody else to decide. But very much to your point, at Orchard Global, it's in the name, we are global. We can and have moved our capital around globally. So to be defensive, we're putting a lot of chips in Europe. Let me share with you.
So the reason I'm asking that question is, the conversation I'm hearing with a lot of people is, how do I defend myself against the US tech bubble? Where do I put money to provide some sort of diversification? And is Europe a more stable place to put that money to work?
Europe, Northwest Europe, and asset-heavy lending is the defensive play right now. Let me share a conversation I had, with the German finance minister. As you may know, I'm involved with the Munich Security Conference, and we had a roundtable with the German finance minister. And we may or may not had some of the CEOs of these banks you were talking about. And I said, look, do you want the good news or the bad news? He said, give me the good news. I said, the good news is, a disproportionately large share of any extra capital we have, we're investing in Europe. And a lot in his country, in Germany. He's like, that's great. I'm like, well, yeah, it's great for our investors, but it's not great for you because you guys are having to pay up 2 and 3 times. But getting back to the investors, yes, I unambiguously am willing to make the statement that the U.S. is looking toppy, both debt and equity markets. Europe, look, I have all 3 of my children were born right here in London. My wife is European. I love the place. And it makes me sad for future generations of Europeans. But as an investor, and that's our job, to steward people's capital, you can get great collateral packages in important industries that need capital, that have to pay up. And that's just a lot easier decision than to decide how late I go in the U.S. AI boom and bust trade.
Okay, Paul, thank you very much. Thought-provoking conversation. Paul Horvath, CEO and co-founder of Orchard Global Asset Management. Coming up on the programme, we'll think about where European politics is going, decline or not. Marine Le Pen, France's far-right leader, says she will run in France's 2027 presidential race. We will have more, and this is certainly having an impact on European government bond markets. This is Bloomberg. Let's talk politics. The French far-right leader, Marine Le Pen, heads outside the capital to La Sarthe today, alongside her protégé, Jordan Bardella. It comes after the National Rally leader's embezzlement conviction was upheld, but judges handed her a reprieve on an election ban. The ruling now clears the way for Le Pen to lead her party into the next presidential election in 2027. Let's bring in Bloomberg's Caroline Conin for more. And Caroline, it seems the bond market's just waking up to this as a possibility. It's like she sounded the starting gun, I suppose, on this race for 2027.
Yes, the race has definitely kicked off last night with Marine Le Pen declaring her candidacy. And of course, the bond market is reacting at this possibility. And perhaps also the fear that we had back in 2017 when Macron was first elected of the possibility of having a runoff between the far left and the far right, Marine Le Pen versus Jean-Luc Mélenchon. That's obviously one of the scenarios. But I want to show you these papers, Les Echos front page this morning, convicted and candidate, because I want to go back to this case. Yesterday, the Court of Appeal was a very interesting development in this Le Pen saga. Remember, last year she was banned for 5 years. This ban was brought down to 15 months by the Court of Appeals. 15 months that the court said she has already served. But there was one thing that could have prevented her from being a candidate, is that she has to wear an electronic bracelet for 1 year. And she had said before the verdict that she would withdraw her candidacy if she was forced to wear this electronic bracelet. But after this crisis meeting at the National Rally yesterday afternoon, she decided otherwise. She decided it was her turn to go for these presidential elections, not Jordan Bardella, not her 30-year-old heir, because she has actually one more card. She can still appeal one more time this decision to the highest court in France, Cour de Cassation, and that court is probably not going to give her its decision until the presidential election. So that means she can still campaign without wearing this electronic bracelet.
Caroline, what is the polling telling us? Because we've been waiting for this moment. Is it Bardella? Is it Le Pen?
Yeah, of course, both have been tested over the past few weeks. We'll have new polls probably over the next few days. At the moment, Le Pen is polling at more than 30% in the first round of the presidential elections in April. As you know, the elections are in 2 rounds. So versus Edouard Philippe or Gabriel Attal, the 2 former prime ministers who have officially declared their candidacy. At the moment, she would do better in the first round. It isn't clear, however, if she would win against Edouard Philippe, who seems to be the best place to beat her in a possible run-up. Philippe, who was on TV also last night, saying that he wants to avoid the worst for the French, which would be Le Pen versus Mélenchon, far right versus far left in the runoff, which he said would make would be an impossible choice really for the French. But for many strategists, campaign strategists, the fact that Le Pen is a candidate rather than Bardella could actually be good news for Edouard Philippe, perhaps not such good news for Gabriel Attal, because Gabriel Attal, 37-year-old, was hoping for this kind of Gen Z battle between him and Bardella, very present on social media, very attractive to this younger part of the electorate. And in fact, we may have this battle between those two, 50-year-old something. You know, Edouard Philippe is 55, Le Pen is 57, kind of going back to old politics. And that could actually be good news for Edouard Philippe to boost as well his candidacy.
Caroline, thank you very much. Caroline Conin. And appropriately, we're just seeing the French President Emmanuel Macron arriving at the NATO summit over in Ankara, in Turkey, after his very eventful visit to Syria, of course, possibly trying to put that behind him. But arriving for these talks, as we've seen other European leaders do. And
the sunglasses are back. The aviators are back. We are waiting, obviously, for the big event, which is going to happen in the next few minutes, we understand, which is the comments that we're going to get from President Trump. And we will bring those to you when they happen. In the meantime, let's talk about what we are seeing in markets this morning. And one of the factors that we are certainly focusing on is what is going on with the oil price. Skylar's here. Inflation, is it back? Is this a threat? Actually, I'm surprised. We're only at 76. on Brent. There's an argument to say it could be way higher than that.
I mean, absolutely. I think the main point that we're taking away from this is that the U.S. and Iran still haven't agreed on quite a lot, right? So this has come up because the U.S. wants ships to transit one way along the coast of Oman, and Iran wants ships to transit another way along the coast of Iran so they can see who's going through and approve ships accordingly. And so that's how this has come up. But I think the market is looking through it largely because there's this expectation, probably rightly, that Trump doesn't want to escalate tensions before the midterm elections. He doesn't want oil prices significantly higher. And so, it's not that big a move in the oil price. It's 6% on the week, which relative to what we had previously isn't a lot. You have a feed through to bonds because there is an implication from a central bank perspective. We know they are reacting to that, but risk assets are relatively muted reacted.
Okay, so 2.4% higher on Brent. 75 is the handle now. So we're actually pulling back a little bit from that earlier response. So we see bond markets responding. Looking ahead then, Skylar, the big event, I suppose, from a pure macro perspective is the Fed minutes. I saw a piece, I think it was from Standard Chartered, talking about this being perhaps a very slimmed down version of the minutes, just as we'd seen a slimmed down statement. We talked for many years about the few and the many and all of those other voices that come through in the Fed minutes. Maybe we don't get that. We're not sure, I suppose.
Yeah, I mean, I think we're unsure of what we'll get. It's probably going to be slimmed down. There's going to be lots of parsing of what different Fed members are saying. I do, though, take a lot of guidance from what we got on non-farm payrolls last week in terms of the market's reaction. So it was a weaker than expected number, and you did have a bit of a dovish reshuffle. You had the dollar sell-off, but not a lot considering that CFTC positioning showed that the dollar long that we had before that print was the biggest one in 10 years, essentially. And so I think there's this bias to have higher for longer in the market, and that shift really happened at the June meeting. And yes, part of it was Warsh, but a lot of it was the SEP and the fact that you had 9 out of 18 members expecting a hike this year. And so the bias today, I think, is just, you get more color on that, but it's a reminder of why we had that hawkish shift in the first place.
Yeah.
Korea?
Just Korea?
What are you? We're in a bear market. How did that happen?
I mean, I think you need to scale bear markets differently.
Yes.
Like when we talk about bear markets, I think you always need to add the more technical before, right? Because technically Canada was in a recession for 2 quarters of, recently, and it's not really in a recession if unemployment is still low. In the same way that you're not really in a bear market when your standard deviation moves.
So what is a bear market? What is a bear market for the Korean market?
Defining it right here on our set.
Precisely.
You have that power, Skylar.
I think it's persistent negativity. And I think what you're seeing in Korea in particular is that there's still that kind of dip buying within retail. Yes, you may have had some profit taking post Samsung results, et cetera. That means that you have downside. But until I think you see persistent weakness over multiple days, multiple weeks, I wouldn't really call it a bear market just on the downside move that we had.
Skylar's new definition, persistent.
Absolutely. I like that we put technical in front of it. Then we don't have to we don't have to argue about what it is. We can just, but we do defer to you, Skylar, on this. So that's what we're looking ahead to. I mean, looking ahead to European politics. Anything else on your radar for this trading day or into the end of the week then, Skylar?
I mean, I'm really looking forward to U.S. inflation next week. I think because we had non-farm payroll, I know it's next week, but that's what I'm focusing on. This is kind of like an in-between week.
But no, U.S. inflation.
Yeah, I mean, I will be watching the football this weekend, actually, surprisingly.
Okay. There is a lot of it, so it's hard to miss. Skylar, thank you very much. Skylar Montgomery-Coney from our Markets Live team with everything that is happening on these markets, and looking forward to inflation and the football. You see, that's the kind of life we lead here on the Opening Trade. That is it for the Opening Trade. The Pulse is up next. Guy's turn to do the extra hour this morning, so he'll be here with that, continuing the coverage of everything that's happening at NATO. Of course, this is Bloomberg.